Primetime. I'm Tamanna Inamdar.
My name is Ayush. Let's have a look at today's headlines. The CBI charge sheets a former PNB CEO and two current directors in the Nirav Modi case. The Finance Ministry wants the trio to be divested of all powers.
Dena Bank stock falls the most in 13 years after the RBI orders it to stop lending.
Manipal TPG revises its offer for Fortis Healthcare, shows a willingness to include capital infusion of 180 rupees per share.
Retail inflation rises marginally to 4.58% in April on the back of higher fuel prices. Prices of vegetables and pulses cool off.
Markets remained little changed ahead of the Karnataka poll results as investors stay away from risky bets.
And widespread violence mars West Bengal Panchayat elections. 6 people are killed and over 40 injured. The centre calls for a report from West Bengal government on the violence. Well, let's begin with the top story of the day, and that is the Nirav Modi case. Today, the Central Bureau of Investigation has named Usha Ananta Subramanian, former CEO of Punjab National Bank and current head of Allahabad Bank, in a charge sheet filed in the Nirav Modi case. PNB's Executive Director KV Brahmaji Rao and Sanjeev Sharan have also been named in that charge sheet. Usha is currently the CEO of Allahabad Bank. The government has also directed that the officials named be removed and divested of their executive powers.
Now, to take the story forward, Charlene D'Souza joins us now. Charlene, you've been tracking this case from the start. What are the key highlights from the CBI charge sheet?
Okay, so this is the first charge sheet that the CBI has filed in the special court today. So the Central Bureau of Investigation has filed a charge sheet and has named 23 bank officials and a chartered accountant and also officials from Nirav Modi's firm. Now, one of the 23 people named in this charge sheet is Allahabad Bank's MD and CEO, Usha Ananta Subramanian. She was the former MD and CEO of Punjab National Bank. The two executive directors of Punjab National Bank, that is Sanjeev Saran and KV Brahmaji Rao, have also been named in the charge sheet. Now, another person named in this charge sheet is Nirav Modi's brother. Now, this charge sheet has been filed after the FIR was filed by CBI after a complaint came in from Punjab National Bank 3 months ago. Now, CBI is expected to file a supplementary charge sheet for Mehul Choksi in this case within this week. Now, around 80 witnesses have been examined in this case according to CBI, and so far the investigating agency has arrested 19 people. Now, CBI said that the investigation revealed that during the period of 2011 and 2017, the accused officials of Punjab National Bank in conspiracy with said owners of the firm, that is Nirav Modi's firm, and others had fraudulently issued a large number of letters of understanding to overseas bank to obtain buyer's credit in favor of Nirav Modi's firm without any sanction limit or cash margin and without making entries in the CBS system of the bank. Now, further, the PNB officials did not implement the circulars and caution notices issued by the Reserve Bank of India regarding safeguarding the SWIFT operations and instead misrepresented the factual situation to RBI.
All right, Charlene, thank you for all of that information. Meanwhile, the government was quick to move into damage control mode. Following the charge sheet, the government wrote to its members in the board of PNB and Allahabad Bank seeking to strip off executive powers of the officials named in the charge sheet. Financial Services Secretary Rajiv Kumar said the government is committed to clean up the banking space.
We have in our turn, around 10 days before, have asked for explanation from the two EDs in the Punjab National Bank and the current MD in the Allahabad Bank. This was essentially because of the fact that when the SWIFT and CBS integration was to take place, those circulars came in 2016. There had to be a rigor. These are the serious things, and you remember, and you are aware that this is the duty of the senior management to see that risks are minimized in the system. So we have issued that notice and explanation 10 days back, and as you would see that charge sheet has been filed today. So today we have directed our directors in the board of PNB and in the Allahabad Bank to put a resolution in the board to say that the concerned EDs and concerned MDs should be divested of all powers straight away. For the removal and for the dismissal, there is a set procedure. One notice and explanation was issued around 10 days back. The government about the removal and about the disciplinary action under the Section 8, this process will also start.
Now, the government's doing certain other things to clean up the banking system. What are these particular measures? Nikunj Ori has this report.
Besides asking boards of Punjab National Bank and Allahabad Bank to remove these three officials from their posts who've been named in the CBI charge sheet, the government has reaffirmed its stance on cleaning up the banking system further. The Financial Services Secretary said that the banks have been aggressively identifying NPAs and making provisions for it, even when it involves them to take huge losses on their books. The Financial Services Secretary also said that banks have been asked to collect passport details of directors on the companies who've borrowed more than 50 crore rupees and refer cases to investigating agencies in case they find any possibility of a fraud. The Financial Services Secretary also said that the government is committed to cleaning up the banking system further, and the worst is behind us. He also said that the Reserve Bank of India's decision to stop further lending by Dena Bank is also a part of the reforms agenda, and if this sort of a cleaning up needs to take place, then you have to have some sort of halt in your operations.
Well, Allahabad Bank on its part has said it has not received any formal communication with regard to the CBI charging its CEO, Usha Ananthasubramanian. But let's talk a bit more about the latest developments in the PNB fraud case. Ashwin Parekh, Managing Partner at Ashwin Parekh Advisory Services, is joining us for more on this. Very good evening to you, sir. Just your thoughts on where this story is really going, because remember when the first details of this case became public, the bank was quick to say it was limited to 1 or 2 employees just at their Brady House branch. Cut to several months later, you have a charge sheet naming a former CEO. What does it tell you about the extent to which the situation has deteriorated? Mr. Parekh, can you hear me? No, I don't think Mr. Parekh can hear me, but we will try and get back to him in just a bit from now, and hopefully we'll have that audio fixed so we can have his comment on what is happening on the story. But meanwhile, a bit more in the banking space. Shares of Dena Bank took a beating today as well after the RBI barred the bank from further lending on Saturday. The stock, in fact, slipped to a 13-year low today. Let's look at what could have led to this, and a few more details coming in on that. The RBI prompt corrective action looks at 3 aspects. One is capital adequacy, 2 is net NPA, and 3 return on assets.
Now, on capital adequacy, as Tamanna was saying, Dena Bank is doing just about fine with 11.09%. It's the high net NPA and the low return on asset numbers which may have forced the Reserve Bank of India to put Dena Bank in the risk threshold 2 category. Dena Bank has been under PCA since May 2017. RBI has the right to to take discretionary action against a bank under PCA. It looks like the RBI has used this in this case of Dena Bank. Remember, there are 11 banks under PCA. If you compare Dena Bank to IDBI Bank or IOB, Dena Bank at least seems better.
Okay, I'm going to go back to Ashwin Parekh. I'm told his line is fine now. But just before that, to let you know that Allahabad Bank has also said that the Reserve Bank has imposed restrictions on its lending to risky assets at rising higher cost. The CEO of Allahabad Bank has been named in the PNB fraud charge sheet. She was former CEO of PNB as well. Ashwin Parekh is back with us. Mr. Parekh, can you hear me?
Yes, I can.
Okay, very good evening to you, sir. My question to you is that when this entire case first came to light and the details were known by everyone, the bank at that point said it was restricted to 2 or 3 employees in the Brady House branch of this bank. Now we have come to a situation where a former CEO and 2 executive directors have been named in the charge sheet. What is it telling us about how deep the rot is?
Well, there are 2-3 different aspects to this. One of the aspects, of course, is, and that's where I suppose the EDs and the MD come in, and that is the aspect of negligence, perhaps more than fraud. And then perhaps, one has to, of course, go through that 7,000 odd pages of the charge sheet. But, you're getting an impression very clearly that when the RBI, in fact, in 2015 had warned all the banks, and in 2016 specifically to PNB, to ensure that they link their SWIFT to the core banking, they did not do that. So for that operational risk, there is an element of negligence that the charge sheet is talking about. So it's nothing to do with the fraud per se, nothing to do with the fraudsters. That's where the 3 people that you talked about come in. But here we're talking about at the senior management level, not paying attention to the regulators' clear instructions by way of a circular and then thereafter by way of a clear note that proper action
Mr.
in
Parekh,
terms of linking.
Sure, but Mr. Parekh, to be fair, we do not know exactly what is in the charge sheet. We do not have a copy of the charge sheet. We do know that there are sections like section 420, 420 as well. Are you saying that these all are just sins of omission? That the top executives of Punjab National Bank at that time overlooked or didn't do their job well? In that case, why would they be charged with things like criminal conspiracy?
No, this is not. As far as the MD and the ED is concerned, very clearly it cannot be criminal conspiracy at all. Because in order to establish that, intentional fraud or intentional guilt is to be established. This is not that. Basically what is being talked about is there are 2 sets of people associated with this. The first set of people are those who actually directly associate with the fraud, and there the intention was very clearly, or there was to defraud the bank, with that amount, and then to provide, evergreening kind of a loan account or the LOU kind of a let's say arrangement to the particular borrower. That's not applicable to the senior people at all. The senior people, as far as, the charge sheet can perhaps, one has to really study the charge sheet. But they cannot be. Otherwise, we may have a situation where, all the employees of the bank, for a certain operational risk may be charge sheeted. We're not talking of that. So quite clearly, I'm very clear in my mind that the question of criminal proceedings against the seniors is not something that will hold water. It will not even stand the test of the system. But the negligence and the order of that negligence, is something that, unless of course it is proved otherwise by these 3 or 4 people or the other seniors, that seems to be the case, basically. And the investigation also talks about that. When the secretary started his press, his initial remarks by saying very clearly that there is enough evidence available on the basis of which the charge sheet has been drafted and on the basis of which the secretary has come to a decision to request the board of PNB and Allahabad Bank to take the necessary action. So I would certainly say that it's not criminal as far as the seniors are concerned. For the others, those who directly ready house.
But Mr. Parekh, when it comes to a situation like this, also when it comes to what the CBI said, you feel that perhaps it doesn't warrant criminal action, but one in terms of liability, considering it's not only people at the bottom or executives only at the bank, but also senior executives, because they've also spoken about how essentially making entries in the CBS system of the bank and how the SWIFT system was misused. That also is something that is being spoken about today. Wouldn't that to some extent attract some sort of liability, at least when it comes to some sort of criminal liability for the senior executives? You still don't think that it does?
To my mind, I would say that, maybe there can be civil kind of proceedings and on account of the financial loss. But to extend it to criminal, to say that there was an intentional wrongdoing, would, I thought, be stretching the whole. Then in that case, what may happen is for every NPA or every fraud in the bank, you cannot really have the senior management being punished, in terms of just a financial liability that you're referring to, even if you don't talk about criminal. Negligence, certainly. Accountability, certainly. And that is, I think, more than anything else, I wouldn't really worry too much about what would happen now. But a clear signal is actually being sent out to the system, saying that this government is not going
Mr. Parekh,
any kind of
Mr.
negligence.
Parekh, just to take that thought forward, if it is a question of responsibility, and at the root of the investigations and a lot of public sentiment about the PNB case is, does the buck stop at the top, so to speak? In that case, what is the message going out to other PSU bankers and top executives today?
No, you have to distinguish. There are more facts. The most critical fact is that the regulator gave warn that must get properly registered. Because despite the warning, if the senior management does not comply, then it's much beyond. Then it's negligence and non-compliance. Quite clearly.
All right, thank you so much, Ashwin Parekh there, commenting on the latest in the PNB case.
Now, moving on, the Manipal TPG consortium has yet again revised their offer for Fortis. The new offer has sweetened the deal for shareholders, with the consortium promising to infuse capital of 180 rupees per share. Sajid Mangat joins us now. Sajid, what next for Fortis? Will the shareholders back this offer over the one that we saw with the Munjals and the Burmans?
The race for Fortis Healthcare is hotting up, and we saw on Monday evening that Manipal and TPG consortium has revised its initial bid. Now, the terms of the revised bid is that they would be infusing capital into Fortis Healthcare of nearly 2100 crores, but that's valued at 180 rupees per share. Now, that values the Fortis enterprise at nearly 9400 crores. Remember, when the entire thing began, Fortis was valued under 100 rupees, and now the bids have gone up to 180 rupees per share. Aside of that, it's also retained the other structures which it had mentioned in the earlier bid, which includes merger of the hospitals with Manipal Hospital, and followed by a rights issue which will be used to buy out SRT or SHT. These are the assets which are there in the Singapore arm. What TPG Manipal has very categorically stated that this offer is valid for only 15 days for the board to approve. That is, by May 29th, the board should come back and okay or approve this bid. Otherwise, it will be considered terminated. So this is something which is coming in from there. Earlier last week, we saw that the board of Fortis had gone in favor of Hero and Burman bid, which included initial equity infusion or cash infusion of nearly 1050 crores and a warrant issue, and which they also sought 3 to 4 board seats on the board of Fortis. But now that the bids have been revised by Manipal and TPG, all eyes are now on IHH because that's another bidder in fray, and they are likely to come and put their bid across to the Fortis board and maybe take it to the public shareholders as well.
All right, thank you so much for that, Sajid. Clearly, this story is far from over. One revised bid, possibly one more to follow. Now, the consumer price inflation has picked up for the first time since January on the back of a surge in petrol and diesel prices. Retail inflation for April came in at 4.58%. Prices of vegetables and pulses cooled off in April, while food inflation remained largely unchanged at 2.80%. The core CPI also rose to 5.9% in the month of April. Meanwhile, India's wholesale price inflation hit a 4-month high in April. This was largely led by higher crude and fuel prices. Primary articles grew dearer by 1.41%. Vegetable prices, however, fell as ample production during the Rabi season kept prices under check. To talk more on inflation figures, CPI and WI, I'm joined now by Upasana Bhardwaj, economist at Kotak Mahindra Bank. Very good evening to you, Upasana. What do you make of the numbers that we are seeing? Is this consistent beginning of a trend reversal?
Yes, clearly, I think the day began with WPI inflation, and we did see that WPI inflation, both core and food inflation did pick up. In fact, within food, I think the primary food section was extremely, I think it increased by 1.9% month on month. So clearly, we already were expecting a slight upside to the expectations. Mind you, we were already having a WPI reading of 3.11%. We were already expecting that. And our expectations of CPI was 4.49%. So, we had a slight upside to the core inflation, and that's where we were surprised. Now, looking at the forward trajectory, clearly, we know that there is an adverse base effect which is setting in, which is expected to put in the CPI inflation trajectory higher in the next 2 to 3 readings. Clearly with RBI's upper range of the first half being 5.1%, the recent trends are not very encouraging, which clearly suggests that we would be seeing about 30-40 basis of an upside risk to RBI's inflation range of 4.7 to 5.1% in H1 itself. And beyond that, of course, so we'll have to see how exactly the various risks which are there around the inflation trajectory, how do they pan out. Of course, we have seen the recent rally in the oil prices, which in turn is likely to start feeding in the CPI inflation with a lag, of course. So I think all in all, clearly, we are seeing upside risk to inflation as we go ahead. Of course, the H2 inflation trajectory does look a little on the downside, supported, of course, by base effect positive.
Right, Upasana.
But having said that, yes, like I said, crude oil prices, MSP clarity, all of these factors are something which are going to be playing a very...
Upasana, just as a follow-up question, you mentioned some of those things with crude oil prices as well. But do you think this could particularly have any impact on policy rates, considering the June 2018 monetary policy review coming up?
See, here, I think RBI has been very cautious already. Clearly, the risks are increasing as we are approaching the policy because of the way crude is going. But having said that, we are not yet looking for a rate hike in June policy. Definitely, there is a chance that we see a shift in stance with already 2 members agreeing. And I think it will be a 3:3 and then probably a voting, a veto power by the governor will be exercised. So the chances of a policy stance shift towards withdrawal of accommodation is much higher. And then comes the August policy, by when the MSP-related clarity would be there. Monsoons also, we would have had some clarity. And, of course, crude in terms of sustaining in which range. So I think all in all, if at all I was to assign a probability, I would assign a higher probability to August rate hike. But having said that, the second half of the trajectory still looks relatively benign. We are still looking at a 4.5% inflation by March 19. So given the kind of, different pockets of sectors which are slightly weak, I'm not yet sure whether even an August rate hike is a done deal yet. We'll have to be very watchful on the incoming data.
All right, Upasana, I really appreciate you joining us and sharing those insights. Now, moving on, after a 19-day break, oil marketing companies have hiked fuel prices yet again. Ironically, this comes a day after Karnataka went to polls. Oil marketing companies have been revising fuel prices on a daily basis since June last year, in tandem with global crude oil prices. The last time fuel prices were raised was on the 24th of April. Due to rising oil prices, the government, remember, had asked fuel retailers not to increase fuel prices, but instead to absorb losses up to 1 rupee per litre. Speaking to Bloomberg, Oil Minister Dharmendra Pradhan said that the government was aware of the price pinch faced by consumers. He also said that the government has been constantly demanding a special price mechanism for large oil importers such as India from Gulf allies.
The energy price must be responsible and reasonable. we don't expect a much lower oil price. We don't expect a $30, $40 oil price. But the price, we are a consumer sensitive country. We are a very price sensitive country. Our consumer has their own issues. So we must expect a very reasonable price. And today I can say, before Iran sanction, the price is pinching Indian consumers.
But the Gulf producers are still your natural partners when it comes to oil imports. So is there anything you would like to see them do when it comes to easing the market and bringing the price down?
We will appreciate one thing. Since last few years, we are consistently raising one issue. We appreciate our relationship, our partnership. Yes, I do admit Gulf is our natural ally due to geographical proximity, due to cultural and historical linkage within this area. But India is consistent one thing. Recently, we discussed with our colleague from China, colleague from Japan, colleague from South Korea, why we will be giving Asian premium when we are the biggest consumer, we are the substantial consumer. Why India is going to pay more price for our requirement? With this consistent point, consistent issue we are pursuing in front of our friend from GCC area, you must consider a special price mechanism, those who are taking more oil from you.
Well, all that's fine on strategy, but the question is that what happened for 19 days? How did oil marketing companies not increase prices for 19 days and suddenly decided to go back to the usual routine just after Karnataka voted its next government? Is there a connection? We'll be talking about that on Primetime debate tonight, so do join us for that conversation.
Well, moving on, a group of ministers headed by Assam's Finance Minister Himanta Biswa Sharma met today and discussed the issue of imposition of a cess on sugar. This comes after some states, including West Bengal, Andhra Pradesh and Kerala, opposed the imposition of a cess in the 27th GST Council meet on May 4th. Speaking to Nikunjori, Himanta Biswa Sharma said that the group of ministers have sought whether the GST Council has any legal powers to impose a cess on any commodity.
Whether the GST Council has at all power to impose cess. So we have decided to refer that question to the Law Ministry. Second, suppose we have a power and we decide to impose the cess, will it go to the farmer or it might stuck at the level of some intermediary? So we have asked for a detailed report from Food Ministry to explain how they are proposing to disburse the proposed collection out of the cess.
Since GST came into being, it subsumed all the cesses and all indirect levies. So is it morally correct to levy another cess on sugar? And if you succeed in levying cess on sugar, would this continue with cesses being levied on other commodities as well?
First of all, we will answer the moral question later, but we must know whether legally we have power or not. Okay. So once we know we have the legal power, then we have to justify that power on the moral standpoint or in the standpoint of public interest.
In other political news, widespread violence was reported across West Bengal as polling for the single-phase Panchayat elections began today. 8 people were killed and over 40 injured.
The election commissioner refuses to give time to any of the other political parties. We have strongly condemned this, and we have called upon all our units all across the country to organize protests against this cold-blooded murder of democracy in Bengal.
shocking visuals coming out of West Bengal. Now, moving on, the Delhi police today filed a charge sheet in the Sunanda Pushkar case. The Congress leader, Shashi Tharoor, was named for abetting the suicide of his wife, Sunanda Pushkar. The police told a city court that his custodial interrogation was necessary as investigations were yet to be concluded. The Delhi police claimed that there was enough evidence to proceed against him. The charge sheet in the death case of Sunanda Pushkar was filed before the Metropolitan Magistrate Dharmendra Singh, who will consider it on May 24th.
Now, a day ahead of Karnataka poll results, investors opted for caution as the markets ended little changed. The Nifty stayed put a little below the 11,000 mark, while the Sensex was at about 35,000. Both the mid-cap and small-cap indices tumbled about 1%. Agam Vakil is now summing up the day's action.
Well, it was a very quiet day of trade when it comes to Indian equity markets, with the Nifty and the Sensex closing flat. In terms of key gainers, today we had gains in NTPC, which advanced by as much as 2.5%, and Dr. Reddy's Laboratories from the pharma sector up as much as 1.4%. The broader markets were also buzzing. We did see substantial gains in Sun TV on the back of earnings, advancing by 11%. Parag Milk Foods, after we've had an analyst meet which suggested positive growth coming in when it comes to Parag Milk Foods. That's the reason why I saw 9% advance. But, well, there were deeper cuts in the broader markets too. So we did see substantial weakness in PTC India and Reliance Naval, and among many others which also reacted to earnings. We had a drop of nearly 11% for Tata Global Beverages, and Suzlon Energy also declining by as much as 10%. On the whole, it was pretty mixed, and the advance decline ratio was towards the declines. The question really is, can this trend change as we move into trade tomorrow?
Now, Hindustan Unilever's profit beat analyst estimates in the fourth quarter on the back of a double-digit growth in sales volumes. While revenue rose 12%, net profit rose about 14%, despite an exceptional loss during the quarter. Charlene D'Souza gives us the top 5 takeaways in this report.
HUL's revenue growth for the quarter 4 came in higher than estimates. It was up 10.8% at 9,097 crores, which was on the back of higher volume growth, which came in at 11%, which was also higher than estimates of 6%. Now, volumes were largely led by a growth in home care and personal care segments. Detergent, skin care and hair care also contributed to the rise in volume growth. Now, HUL's gross margins were up despite a rise in raw material costs, while advertising costs were also elevated during the quarter. Now, the management said that there has been a gradual pickup in demand. However, it will wait for a couple of more quarters before it establishes a trend. Now, it also said that it expects raw material prices to remain firm, which will be largely led by crude.
We expect gradual improvement in demand to continue. Input costs are likely to inflate further, given crude, and currency is the other key watch out for us. With trade normalizing and demand improving in the near term, we anticipate a step up in competitive intensity. Our strategy remains unchanged. Our focus remains on volume-driven growth and improvement in operating margins. We will continue to drive growth which is competitive, consistent, profitable, and responsible.
So, Tamanna, it's been a busy weekend and a busy week, but what's up on Primetime Debate?
Well, tomorrow is the Karnataka elections, but we are not talking about the Karnataka polls directly.
Yet. Okay.
Right now, because the exit polls are there. We don't know what else is going to happen till tomorrow morning. But we are talking about how the Karnataka election seems to have given us a reprieve of about 20 days from fuel hikes. Now that the votes have been cast, the prices are now raised once again.
So we'll see those long queues again?
Hopefully not. But is it just a coincidence? That's the conversation coming up next on Primetime Debate. I'm speaking with the BJP, the Congress and former Oil Secretary S.C. Tripathi. Do stay tuned for that.